Between 2001 and 2014, this little-known investor produced a total return of 921%. That's an annualized return of 18.4% after fees, which tripled the return of his benchmark over the same period. Importantly, this investor didn't use leverage, he didn't chase fads, and he didn't even try and impress others. All he did was quietly compound his investors' capital by following a few simple investing principles that most people in finance can't. In this video, I'll share the 5 core investing principles that generated life-changing returns for investors and turn this simple money manager into an investing legend. Hi, my name is Brian Feraldi. I'm a financial educator with 20 years of investing experience. Now, this little-known investor's name is Nick Sleep. He was a co-founder and portfolio manager of the Nomad Investing Partnership. Now, Sleep kept a low profile throughout his career, but he gained a lot of attention in the investing community after his investing letters were leaked to the public. Now, these letters are chock full of sound investing principles and are worth reading in their entirety, but I think his investing philosophy really centers around 5 core investing principles. Principle number 1 is to know the business better than Wall Street. Now, Sleep believed that most investors spread themselves too thin. They go an inch deep on dozens of stocks and never really get to know any of them well. Sleep believed that to beat Wall Street, you had to go a mile deep on just a few stocks and understand the business far better than the rest of the market does. Now, for Sleep, that meant diving deep into the company's DNA by studying its corporate culture, how the company makes money on a unit basis, all of the details of the company's business model, and most importantly, what the company can do that its competitors can't. Now, to find this information, Sleep just didn't read the annual report. He treated investing like investigative journalism. He spoke with the management teams directly, he visited their properties, and he analyzed the competitive dynamics of the companies firsthand. He even studied the company's cultural norms and customer behavior. Sleep believed deeply that his investing edge came from going far beyond the spreadsheet to deeply understand how a business actually worked in the real world. And Sleep was hunting for companies that he said did 1,000 small things right. This included companies like Costco, IKEA, Amazon, and Berkshire Hathaway. Sleep believed that finding companies that did 1,000 small things right added up into a durable competitive advantage that other companies found impossible to replicate. Now, Sleep's second core investing principle was to invest in founder-led companies. Sleep's portfolio was almost exclusively invested in companies that still had their founder at the helm, and it's no mystery as to why. Sleep believed deeply that founders usually had both skin and soul in the game, and that founders were far more likely to care deeply about the company than a hired gun. Founders also tended to make decisions that set the business up for long-term prosperity. And that's because they treated the company like it was their own, because in many cases it was. Sleep specifically looked for leaders that had low salaries and big ownership stakes. This would include people like Warren Buffett of Berkshire Hathaway, Jeff Bezos of Amazon, or Jim Senegal of Costco. Sleep believed that these managers' incentives were aligned perfectly with outside investors. On the flip side, Sleep was very cautious about investing in companies with hired gun CEOs. He believed that these CEOs were far more likely to prioritize their short-term bonuses over long-term value creation. By the way, if you want a free copy of all of Nick Sleep's investing letters, just visit longtermmindset.co/sleep. and I'll email you a free PDF copy. Now, Sleep's third core investing principle was to look for companies that were deploying a highly unusual business strategy that he called scaled economics shared. Now, Sleep observed that as most companies scale up their operations, they use their growing power to boost their own profits. However, the companies that interested Sleep the most did the exact opposite strategy. As they grew, these companies became more and more efficient. And rather than keeping the efficiencies for themselves, they consistently passed on the majority of the benefits that they were accruing to their customers by consistently lowering prices. Nick Sleep called this scale economics shared, and it's exactly how companies like Walmart, Costco, and Amazon built up tremendous trust and loyalty with their customers. Take Costco as an example. As the company grew, it didn't raise prices. it continuously cut them. This created a virtuous cycle that worked like this. First, lower prices kept customers coming back and brought in new customers to the stores. This, in turn, increased the company's volumes, which increased the company's buying power. The increased buying power lowered Costco's costs and deepened Costco's competitive moat. That allowed them to further lower prices, which kept this virtuous cycle going. As Sleep put it, the longer we held Costco, the better the business got. And this isn't just a generous strategy, it's really smart. Companies that consistently share their prosperity with customers become habit forming with those customers and creates what Sleep likes to call a psychological moat. Following this strategy isn't just about lowering prices, it's about embedding the customer into the business model itself. And plus, when tough times hit, Sleep found that these companies actually gained market share as consumers looked for ways to save money. So this made holding companies that were following this strategy during tough times even easier because Sleep know that the businesses were just getting stronger. So when you find a company that grows because it gives more and more value to its customers, you may be looking at a long-term compounder in the making. Now, Sleep's fourth investing principle is to do what he calls destination analysis. Sleep never focused on what the company was today. He always asked what the company was becoming in the future. This destination analysis focused heavily on three key questions. First, where will the business be in 10 to 20 years? Second, what must management do now to ensure the company gets there? And then third, what could prevent the company from reaching that destination? Once he did that analysis, he simply asked himself if that future was worth owning now or not. Asking these questions allowed Sleep to elevate his thinking above the short-term noise of the markets and the volatility of day-to-day price movements and focus his attention on the big picture. To succeed as an investor, Sleep believed that you must view investing through that same long-term lens. Short-term noise and volatility are a distraction, especially for those that invest other people's money. Sleep firmly believed that the biggest mistake an investor could make would be to interrupt the compounding process while it's running. And by focusing on destination analysis, he could minimize the chance that he was going to do so. That brings us to Sleep's fifth and final principle, which is to consistently do nothing. Sleep famously invested in Costco for 18 years. Why? Because he believed the best move he could make is simply to do nothing. Sleep believed that most investors get in their own way. They trade too often, they react to headlines, and they chase whatever's hot. Sleep believed that great businesses do the hard work for you, but only if you give them the time to do so. This is easy enough to say in principle, but it can be incredibly hard to follow if you're a money manager. In fact, every single one of Nick Sleep's core holdings fell more than 50% while he was holding them. Having the conviction to hold on to these inevitable winners during tough times is essential to long-term compounding. In fact, Sleep went so far as to believe that his inactivity and his ability to stomach volatility was his biggest investing edge. In total, I think it's reasonable that you can sum up Sleep's entire investing philosophy into just 8 words. Hold great businesses for a very long time. That's exactly what he did with companies like Amazon, Costco, and Berkshire Hathaway, and that's precisely how he generated superior returns for his investors.